Hi everyone, welcome to our panel today. We're going to be talking about evolving trends in consumer finance, personalisation and card programs in lending. Today we're really lucky to have two guests that have more than 20 years experience each in the industry. They've seen the age of credit cards and the emergence of global fintech and disruptors. While much of discussion in consumer finance obviously focus on the end user, we're going to take a look a bit beyond this. Both of our panellists work at the apex of emerging technology and established institutions, delivering the technology that helps to drive innovations in consumer finance forward. So I'll introduce you a bit further to our panellists today. We have Natalie Drummond from Mambu. She's the head of customer success management for Mambu, which is a global cloud banking platform. As I said, she has more than 20 years' experience in the finance and technology sectors and heads up a team of more than 30 customer success managers across the globe, focusing on best practice engagement and mentoring. Then we also have Duncan Curry from Marqeta. He's the country manager ANZ for the modern card issuing platform. Prior to this, he was the founder of Stage 3, which is a growth agency focused on product strategy and innovation and performance marketing for fintechs. And he's also worked at Visa and Tuxedo Money Solutions. Welcome to both of you.
Thanks, Mel.
So today, as we said, we're going to be talking about evolving trends in consumer finance. Marqeta and Mambu both sit at an enterprise level, helping customer-facing banks and fintechs deliver new products faster. They work with companies from innovative buy now, pay later space, as well as legacy players in consumer finance, which gives them a really broad view of the trends that are emerging in this space. So today we wanted to start off talking more broadly. And what do you both see as the key breakthrough trends in consumer finance over the past years as we've emerged from the pandemic?
I'll go first. So, one, we've seen, I guess Australia's kind of led the charge when it's come to, digitisation of transactions, so particularly around contactless. What we've seen is some of these other markets that have been a little bit more laggards have really, kind of pushed through. US is probably one of those kind of big ones, which is, starting to get away from, mag stripe and signature, and now kind of cottoning on to contactless. So it's just kind of taken what we've always known here and pushed it out. So we did some kind of research a while back, and it was a no-brainer for me, but it was kind of groundbreaking for some other people that in the Australian market we are much more likely to use contactless than anywhere else in the world, and like we know that, but through COVID specifically, that's really picked up in some of these other markets.
So I think one of the trends that we've seen is the buy now, pay later, and the way that the Australian consumers have actually really taken hold of this new type of product. So some of the research that we've done has shown that Australian consumers, 24% of them in fact, have entered into a buy now, pay later agreement or activated one of those products. And that's compared with globally around 11%. So we're really seeing the way that Australian consumers are taking on those digital transactions and at the forefront of this new technology. What's going to be interesting is how that plays out in the market in the future, given the changes in the regulatory framework and how that will impact, I guess, the growth of that sector. One of the other key trends that we're seeing is embedded finance. So across the spaces of telecommunications, retail, as well as ride-sharing apps, what we're seeing is they have a existing and somewhat large customer base that they are actively engaging with, sometimes, on a very frequent, also daily basis. So, what do they do to continue to hold those customers within that app or that website? Offering financial products is a very easy way to maintain that retention, but also that stickiness and grow their revenue base. So I feel like this is going to be a really big space for us to watch.
Yeah, definitely. I think, Duncan, the research you were mentioning was that 71% of respondents to a survey said they'd be interested in having a loan dispensed to a Visa or a MasterCard, accessing real-time personalised rewards. Can you tell us a little bit more about that sort of trend, given your involvement in the card space, and how players like innovators like Buy Now Pay Later are using that type of reward system?
Yeah, I think the demand to pay for things with money you either don't want to spend yet or don't have yet has never been as high. So and it's just around kind of the business model that kind of suits to that. And I think, we had this good 20 or 30 year kind of wave of credit cards, and over the last, kind of 2 or 3 years, 4 or 5 maybe, is been around, kind of around this buy now, pay later emergence. I think for us, kind of that next wave is around, kind of taking those kind of two business models. One, credit cards, very, very good business model for the bank. Buy now, pay later, very, very good business model for the customer. And then how do we kind of connect those two things? And if we are looking to get some finance, whether it be a personal loan or access to funds, like I said, you don't want to use just yet. How do I kind of get access to that in a quick and easy way? And as we know, cards are quite ubiquitous and when it comes to their acceptance. So that's a nice, easy way to be able to go, now I can get access to my funds. From a lender perspective, one year get a little bit more data around where it's been used. So historically, if you're just pushing out a 15k loan for something, you just push it into their account and you don't know where it's gone. But when you're carding it, you get a little bit more kind of insight around the usage of it. So I think one, it's good for the customer because then they don't have to worry about kind of delays and how long is it going to take for it to settle into my account and all those sorts of things. You can get real-time access to it. At the same time, it's good for the lender because then they can go, okay, what are the pieces of information that we're getting back from our customers around how they're using these funds that we can help inform better decisions later on.
Cool. And now you're both global companies, so I was just interested in how Australia compares in a global market, especially in terms of the Australian companies that are looking to go global, but also companies like yours that are coming into the market here.
So there's two things. There's companies like ours, which are kind of, I guess the guys providing services to the companies looking at getting into consumers or the businesses themselves. And then there's there's the expansion of those embedded brands. I've found when people are coming in, particularly out of the US, from a brand perspective, where this magical thing called interchange, and you can make money out of card programs. When they start to come into market, kind of really looking at the business model and the financial model, making sure it makes sense here, and is similarly in the UK and the US. From our perspective, we also need to be really cognizant of that and making sure that our business model kind of makes sense for that market. We do play a little bit more in the embedded finance space within the US because it is interchange to be able to kind of share around, where the approach is a little bit different as we expand into different markets.
I guess from a Mambu perspective, in terms of the financial institutions that we deal with and their appetite to expand into other markets, one of the key things is ensuring that they've got next-gen technology hosted in the cloud, ease of change in operations and launching in other countries. But it's not just about taking your existing product from one country and taking it to the next. I think Australian consumers are traditionally a little more conservative than, say, some we're seeing in Southeast Asia. So if you look at things like digital assets, cryptocurrencies, the Australian uptake is probably only at around the 14% mark versus 30% globally. So, financial institutions need to understand their market, but also need to research those markets that they want to go into and the different countries and what the appetite is for those things. So, like you were saying, Duncan, the details and how customers are spending their money is going to be really key, and that market research. So, I think also the way to, or the Australian consumer, what's next for them, right? And what will banks, financial institutions, there's a lot of choice out there now, so how do we make sure that you maintain and grow those customers?
Yeah, I just want to expand on that a little bit as well. So, and we do a lot of research, but we found, so we've got businesses in the UK, US, and here, so we're very, very conscious about kind of the different kind of mindsets between each of the markets. Australia is very well served with their banks and the financial services industry. So as a result, Australian consumers are 70% less likely to take on a neo brand, as in some of the other markets. So, that's quite telling, for us, particularly, when we're talking about embedded finance or, kind of new kind of fintech startup brands, it's going, okay, what's the differentiator going to be? What's the thing that's going to actually shift, some people across in an environment where they're well served at the moment? They're not quite as well served in the UK and in the US, so it does create this opportunity for the likes of Cash App to spring up and do peer-to-peer payments. It does, the likes of Starling and Monzo in the UK. We don't have that kind of need here, so it's not like I always come back to the Bunnings example. Just because people do home renovations in the UK didn't mean that Bunnings worked in the UK. So just because people have financial services doesn't mean we could just plonk the same proposition in this market.
No, it's really interesting. And I guess, so in terms of the Australian consumer then, if we're more conservative, how do you see customer experience playing out? Because that's obviously something that FinTech particularly talk about as a key differentiator in FinTech products. So, I guess to use Netflix as an example, that's really personalised service. How do you see that as a competitive edge for consumer finance companies in Australia, but also globally? And is it just harder here to get that cut through? Or are consumers expecting less?
I mean, I think if you look at things like Netflix, social media, we are consuming things on a daily basis, but not only that, products are being pushed to us, right, based on our search history, based on our interactions with various platforms. So banks and financial institutions are going to have to move towards that trend as well. There is definitely demand and a shift coming from the consumer. They want personalised experience. I think some of the marketer research that we've seen recently as well talks about the volume of customers that want to understand their own behaviours, how they can utilise a bank app or website, whatever, to look at their savings and spending. How can they then monitor those? They want tools to better help them with financial health, or achieving a goal, right? Or whether it be investment, savings, so how can we interact with those things? And I think that's going to be the next level. If we look at Southeast Asia and the surgence of digital banks, it is all about personalisation. Whilst I think there's been a number of failures in Australia with neos and challengers, is it because they've just tried to replicate what the big banks are doing rather than developing something of their own and trying to engage with the customers in a different way?
Yeah, and for me, personalisation is there's a couple of things to that. One, that's on the initial product setup, and then there's kind of the offer strategy and kind of what we're doing in behind that. So the common theme is show me that you know me, and sometimes we don't always get it right, and it's quite interesting. Everyone's opting out of people tracking app behaviours and all that sort of stuff. At the same time, they want to have ads that are relevant to them and all that sort of stuff. So how do you kind of that juxtaposition there? But we don't always get it right, particularly from an offer strategy perspective, and making sure that we're putting in kind of relevant offers to customers. But I think for me, kind of pulling on Mel's example, the personalisation at the product proposition end is where I kind of would like us to focus more on, particularly in this market. We are a little bit kind of me too when it comes to product design, and I think sometimes we can try and think we're creating personalised products for customers when actually the customers want to personalise those products themselves. So how do we give them the tools to be able to kind of design their own path, and whether it be spend controls, limits that they want to assign to certain things, rather than trying to predefine, this is what this persona wants, and then kind of build a product in and around that persona. Kind of giving the customer the full access to be able to go, okay, well, this is how I want to use my product. It takes a bit of work, and it takes a bit of technology to sit in behind that to enable that, but that's where I see us kind of going next, and giving the customer full control to kind of pick their own path.
Do you think either legacy institutions like banks or new innovators in FinTech are kind of leading in that example at the moment?
I wouldn't say leading. It's a good opportunity for us now. I think the technology is at a point now that we can actually start thinking about these things creatively, and how we do that. Like I said, because we are quite well served by our banks here, how do we try and get cut through in some of these sorts of things? And a lot of the banks have been doing a lot of stuff in and around this. I look at NAB a few years ago. They won a few awards for their mobile app because they were able to put in travel controls and do a lot of things within the app. So I think, as I said, we are well served, but I think the next kind of iteration, as these guys are still kind of dealing with some of these legacy platforms that sit in behind it, the acquisition of 86400 by UBank, like I'm really excited to see what they do next. ANZ Plus, from ANZ again, building off kind of almost greenfield technology and go, okay, so what does the next proposition look like? Currently they're paying a bit of catch up to their own business and making sure that they've got parity for their own products. Whether it be MPP or whatever, that we can now do BPay. It's like, okay, awesome. I'll shift across. But how do we? It's kind of that next phase of going. Okay, now we've caught up to parity. How do we use this technology properly? And I think that's going to be the next wave to go. Okay, now I'll shift across.
As a result of the pandemic, digital transactions have never been as high, and I think banks have been forced to go through a technology change and adapt to ways of interacting with their customers. I think what will be interesting is who then takes it to the next level, right? Who then changes the game going forward. So you can be complacent and look at the way that you're interacting with your customers at the moment, but who then takes out that next step and comes up with either a new way or a new product or a different customer experience and personalisation in the app, and what other services they can utilise and keep them within that same facility.
Okay, and so speaking of, I guess, an area where you're both working together, so Member and Marqeta, you work together on quite a few projects, and one of the most recent ones has been with one of the oldest remittance companies in the world, Western Union, which is creating a new kind of customer experience. So I guess this is an example of more of a legacy institution trying to take these steps into this space. Natalie, can you tell us a little bit more about that project, what Western Union are doing and how that plays into these consumer finance trends?
Absolutely, Mel. This is probably, for Marqeta as well, I imagine, is a really exciting new logo for Mambu. It's also an example of digital transformation that we excel in. It's also taking a very like-minded company as well as tech teams across both who are super engaged and want to work together towards the same goals. So Western Union, as you mentioned, one of the oldest remittance companies in the world, they've recognised that the way they were interacting with their customers was really transactional. They wanted to get a much deeper customer experience. So how do they do that, right? So they've started with a simple product, a bank account. It's powered by Mambu. It integrates with a card issued by Marqeta. And what they're doing is exactly what we talked about, right? Giving the control to the customer. They're allowing them to set up savings goals, to work out transaction flows, and how they also then look at their expenditure. Then that allows them to look at that data and obviously then provide personalised services to that customer based on their history and their spending. They've launched, first of all, in Germany and Romania. What's coming next will be South Europe and both North and Latin America. It's really exciting, something that I think is a really great example of transformation.
Great. And Duncan, can you tell us a little bit more about Marqeta's role?
Yeah, as kind of Mel was saying, we kind of sit over top of the core financial product to provide the card products, so in and around that. So one, the connectivity to the networks and providing in-app provisioning of the tokens, so that kind of card issuance side of things. So it's really kind of carding what is a very strong financial product provided by Mambu. So it's the financial product and the card product. So we're going in there providing some of that card product, some of those features in and around spend controls and that we enable via APIs, that, without getting too salesy, but that they're able to, can leverage to be able to, for their customers to be able to, create that personalised experience for themselves. So that's kind of that card interface into the lending product, or the lending deposit FX products.
The other thing that was really important for them was speed to market, but also then speed in the ability for a customer to be able to open new products. So that first engagement, they can open a brand new bank account in a couple of minutes. They can get access to that account or the Visa card and start consuming. I mean, which is exactly what where they start making their money, right?
Yeah, I was going to ask, and you might have just covered it. Is there any specific features that they can now offer that they couldn't before that were probably putting them behind?
Yeah, it's that speed to market, but it's also that ability for them to launch in new countries really quickly. You can't do that on legacy technology, right? It's something that Mambu is at the forefront of. We're hosted in the cloud, and we can, as you say, as I said, we can take them to new markets really quickly. So they're already setting up their expansion within the first 12 months of launching in other countries and across different regions.
Yeah, and I think it helps having that kind of globally consistent, kind of platform, and you don't have to, kind of create iterations everywhere you go. And it's, one set of code base. How do we connect into that? Yes, there's going to be, value chains which are different depending on the market, but just having that, kind of consistent way to engage with us and with Mambu, it just makes it very, very easy to, copy paste and away go. The next program's rolled out.
Yeah, great. Okay, well, we've had some great insights so far. So just to finish off the formal part of the panel, I'd like to have a bit of a look at where we're going in the future. So we've seen rapid and some not so rapid change in consumer finance in Australia, but also globally. Where do you think Australia is heading next, and in the next kind of 5-year time span?
Regulations. Great. Legitimately, regulations has been really good. Regulation created the need for buy now, pay later. So when, I guess, comprehensive credit reporting came through, when responsible lending came through, it made it very, very hard for a lot of the banks who are providing, kind of credit cards to provide credit cards. So the declination rates, particularly in low rate products, very, very high. So it kind of created this need for people who, like I said, wanted to spend money they didn't have or didn't want to spend yet to look for other opportunities. And the buy now, pay later guys, did a really, really good job of kind of tapping into this need. We can see the regulations coming in that space as well. So for me, it's around the business models. The banks had a really good business model for themselves with credit cards. Buy now, pay later, a really good business model for them. So the next evolution is going to be around, okay, I wouldn't say what's the compromise, but what's the sustainable approach that's going to come through. And I think, it's some of the brands that are out there at the moment, whether it be the buy now, pay later or the banks themselves, are in prime position to be able to, kind of capture that what is next. I think, as we've seen, it's very hard to get kind of scale from a customer perspective. So I think, that next evolution of, okay, what does that look like? What does a good, responsible lending, sustainable business model look like? And that's where I'll see the next wave coming through. And it'll be similar to what we're doing at the moment, but just a slightly different narrative. Like how do we change, like our personal loan, payments? How do we do securitisation of certain assets and loan against those? That's where I see kind of the next evolution coming from, whether it's tied to kind of crypto assets or anything else.
I think there'll definitely be a push from the consumer themselves in determining what comes next and the demand. I feel like the customer experience is becoming a very key part in how and when a customer is choosing a financial product. So I feel like, the way that evolves over time and giving customers the choice will really determine what comes next.
Okay, great. Well, I think we have a little bit of time for questions at the end, so I'll just put that out there. I'm not sure how it works. Yeah. Is there? Oh, there's a roving mic. Oh, okay, yeah, so roving mics over here. I think we just have a question in the middle here.
So I understand the whole thing driven by the customer on the marketplace and their behaviour, but what I see, and I'd like to get your thoughts about it, is that I'm always seeing the reaction from the credit bureaus, other lenders in the non-banking sector or banking sector when they're doing consumer credit evaluations, that buy now, pay later is a negative and they get declined continuously. It affects their credit score. It's like, even if it's just one. Like, what's your thoughts on that? Is that going to evolve and change, or is it just going to...
I think it will evolve and change. I think so you look at the US market as a relatively kind of mature credit market, and when people are doing credit assessments in those markets and they see, oh, you've got a card somewhere else, but you're not, you haven't blown out the limit. That's actually a benefit, and there's dedicated credit builder products to help you do that. We've kind of started this journey 4 years ago with comprehensive credit reporting, and I think all of a sudden the risk managers have gone, I've actually got data, and then okay, now what do we do with that data? It's like, oh, they've got debt somewhere else, and now before that people could be liberal with their applications. And that that same person is still exactly the same, still got the ability to service. So I think there will be a recognition of, do you know what, if you've actually got a financial product and you're able to manage that responsibly, then let's consider that. And I think part of the comprehensive reporting, one, you get the score coming through. I recently went through a home loan application myself, and they're like, oh, can we get statements? And I'm like, well, you can see my behaviour. You can see that I've been paying it off. Why are we still going back to statements? So I think there will be, as we mature, we start making kind of mature decisions. But it's kind of like someone needs to change, and who changes that? And I think that's where some of these kind of more challenger brands, when it comes to providing credit to people, will actually take a little bit more of a lead and go, you know what?
Hopefully, because they're still treating it like they've got a gambling habit.
Yeah, totally. I mean, I think customers should be allowed to shop around for the best choice, right? And they shouldn't be penalised for that against their credit score. But at the moment, if you apply for multiple products at the same time, then that's a negative, which just doesn't make sense.
Yeah, even if you've got a tick across every single month, and you've been able to pay it off. So I think it's just a market maturity perspective, and someone will come out and go, do you know what? I like what you're doing there, and we'll make a risk-based decision on that, and then the house of cards will start following.
Great. Now, I think we're unfortunately all out of time for any more questions, but thank you very much, Duncan and Natalie, for the panel today, and
Thanks,
enjoy
Dom.
the rest of the conference, everyone.
Thanks, guys. Thanks for coming.